I'm your host, Robin Murray, here today with Chief Investment Officer Rusty Vanneman. Hello, Rusty.
Hi, Robin.
All right, well, let's start with the month that was. March was kind of a step back for the global markets. What's your takeaway?
Well, it was a step back, but it was still a pretty good quarter for the global stock markets, particularly the international markets, and CLS portfolios benefited from that. I think the big takeaways are, kind of these classic stories. I mean, first of all, the market we may be in a mature bull market. It may be overvalued, but investors should still expect positive returns. We talk about that in the quarterly market outlook that's coming up shortly. Secondly, though, because the market is overvalued, that investors should manage expectations, that we should not expect to see double-digit returns moving forward, but something much more modest. And I think the third thing to think about is, the market is due for a correction. It is due for a bear market, and I'm not calling that for it now, but again, investors who have short-term liabilities or needs shouldn't be putting in the stock market because the market could have a pullback.
All right, well, what about commodities? They were hit particularly hard.
That was a pullback.
Right.
Yeah.
So should investors be, continuing to hold these or dump them?
Well, great question. I mean, commodities are down almost 30% over last year. They had a terrible quarter. I think that, take a step back here. I mean, when you do asset allocation decisions, there's kind of two different ways you can talk about it. And first of all, there's strategic and then there's tactical. So strategic means, are you making a commitment long-term to an asset class? Is there a reason for it? And I think the answer is yes for commodities because they provide attractive long-term returns, and they do it those returns are uncorrelated to stocks and bonds, which means they zig when everything else is zagging. So you put them in, it lowers overall portfolio volatility. It really works. Now, tactically is a decision to have additional emphasis or less emphasis on that strategic decision. And obviously a year ago, to be tactically underweight or to de-emphasize would have made a lot of sense. But moving forward, I think for a combination of reasons, it makes sense to still continue to have commodities because interest rates are really low, particularly when you adjust them for inflation. And when that's the case, commodities usually do well. That wasn't the case last year, but historically it has been. So I think it still makes sense to emphasize commodities.
All right, and you mentioned inflation, and I did want to talk about that because inflation is still pretty low. Does that mean investors just don't need to worry about that anymore?
Inflation is low, but I think investors should still be concerned about it. In fact, investors should always be worried about inflation. It's one of those things that eat away at returns. And in the end, we're investing for enhancing our portfolios after inflation. So you always have to worry about it. Inflation is low right now, but there are things out there that we think suggest that inflation could move higher, particularly wage growth. Wage growth has definitely been kind of starting to grind higher. It makes sense given where we are in the economic cycle. Now, does wage growth lead inflation or the other way around? Lots of debate, a lot of smart people on both sides. I guess you can just say that they usually go hand in hand, and wage growth is moving higher, so I guess we should expect inflation to move higher. If inflation moves higher, and it does surprise, again, that's another thing that helps commodities. So it's another reason to have commodities and why investors should stay balanced.
Well, thanks for your insight today, Rusty. Yeah. That's it for the monthly market review. Thank you for your time and trust in CLS Investments.